Guys, I've spent the last day going through and reflecting on my last 8 years of full-time investing in crypto, and I've put together my top 11 lessons that I've learned as a time-poor investor on how I've made millions of dollars in crypto and also how I've lost a lot of money in this space. And I've put these together not only for myself as a reminder, but I want to share these lessons with you for your own benefit, and particularly those time-poor investors. I know a lot of you are running a business, you have a career, you have a family. This space is moving faster than ever. We're seeing cycles within cycles. We're seeing assets come and go. We're seeing tops, bottoms, market selling off, market pumping faster than ever. There is hundreds of thousands more tokens than ever before. And unless you are full-time in this space, it is very, very, very difficult to stay on top of everything. So I want to share with you today what my lessons are. If you are time poor, you're not full-time in crypto, you're busy doing other things, these are the lessons that I wish I had when I first started out. So I didn't go through the first few years trying to figure out on my own, losing a bunch of money, missing tops, not taking profits. And I'll put these lessons together so you can take advantage of them and really take these into this upcoming back into this bull market when the market starts to go again, so you can actually take profits out and make sure you don't miss the top again, because it's super painful when you do. So there's 11 lessons, crack in. These are ordered kind of in order, but also they are all just as important as each other. So I want to just dive in straight away. So number one is that crypto cycles come and go. I think the 4-year cycle has been a really big narrative, obviously, that has pushed us into this cycle so far. And at the moment, it's questionable whether that 4-year cycle is still intact. But I think the big one is that patterns of previous cycles aren't always the same. You know, history does repeat, but it does rhyme. But the big one that we're seeing this time around is that the cycles are happening faster than ever, and there's cycles within cycles. So we saw late last year, we saw the meme coin run, we had an AI run, we had the 2017 coins run. We're seeing narratives come and go really, really fast, and primarily they're led by speculation on different sectors where people can make money. And ultimately, I think a lot of the fundamental value and fundamental tokens have been left behind, and pretty much anything that didn't have a lot of value got pumped. But also now on the drawdown, we've seen the biggest retracements in bull markets we've seen before in those sectors where meme coins are down 70, 80%, AI tokens are down 80, 90%, et cetera, et cetera. So the big one here is that, yes, the cycles and the structure is looking similar. However, it is not the same. And we're really seeing Bitcoin separate itself from the altcoins. And again, one of the biggest key takeaways for me is ensuring that always we have a large percent of Bitcoin in our portfolio, because a lot of these altcoins are being dragged down quite substantially. And I think a lot of the tokens coming back out of this correction are not going to hit all-time highs. We haven't even seen ETH hit all-time highs. In fact, ETH is about the same as where it's been, over the last 4 years, and a lot of the DeFi projects, etc., are not getting a lot of value. And I think the biggest thing right here is we are coming to crunch time with a lot of these altcoins needing to actually showcase their fundamental value. Otherwise, they're not going to last. If you're holding a bunch of tokens, hoping they're going to return, hoping they're going to go up, again, hope is not a strategy. And I've been really focused on simplifying my portfolio over the last few months, reducing my lower cap alts, just because the way the cycle is playing out is far more towards Bitcoin and fundamental assets over this next sort of couple of years, versus the lower cap, high speculative assets are really feeling the pinch right now. Number two is, I think a lot of people forget that crypto is part of a larger financial market. And we've had so much amazing positive news over the last few months with crypto, whether it be the strategic Bitcoin reserve, obviously having a pro-crypto presidency. We've got, MicroStrategy buying a bunch of Bitcoin. We've got the SEC dropping a heap of cases on crypto companies. We've seen the stable coins, really being promoted by Trump even today at the Blockworks event. Fundamentally, there is some super strong things going on in the space. However, prices are still being suppressed. And that ultimately is because of the macro conditions. And again, I've been talking about this for a long time. Macro liquidity is the thing that drives crypto. You can have the best project in the world, but unless you're seeing risk-on behavior from investors, then the markets are not going to increase. Now, we've been in quantitative tightening for a little while. So quantitative tightening is essentially when they're reducing the amount of liquidity in the economy. That is starting to slow down. We had the FOMC meeting the other day where they're starting to reduce quantitative tightening and hoping it'll end by middle of the year. But again, we're still in that quantitative tightening area. Where we saw back in 2021, where we saw markets really pump, was quantitative easing, right? When markets increase the liquidity, and that finds its way to risk on assets. A lot of people have been saying, when quantitative easing, they've made it very, very clear that they are not going to start quantitative easing unless basically the economy goes to absolute shit and rates go to zero and they start pumping QE. That is not in the foreview at the moment. So we've really got to follow the Fed. M2 money supply expansion is expected to grow, and we are seeing that grow already. there is a huge correlation between Bitcoin and the M2 money supply. That's really positive news. We do need Bitcoin to grow for the altcoins to go as well, right? Altcoins aren't necessarily going to outperform Bitcoin. We need Bitcoin to really lead the market before everything drives behind. Trump is pushing for Jerome Powell to continue to, reduce interest rates. There's a bit of a battle there going on, I think, between the Fed and also Donald Trump. But I think, again, over the course of this year, hopefully we start to see better macro liquidity conditions, and then we can start to get in. A really easy trade, honestly, is just waiting for quantitative tightening to stop, entering the markets in risk off, and then as the economy starts to expand and we start to see the liquidity slowing down, that's kind of the best swing trade we've seen over the last few years in crypto. But ultimately, we've got to really focus here on the stock market, and this is where macro liquidity again comes into play. The stock market is not looking that healthy at the moment. It's in about a 10% correction, which is an official correction area, and investors are really feeling the pinch and are looking much more risk off than risk on, hence why they're coming out of crypto and looking into more risk off areas. So again, we're kind of tied to that. I think we're going to chop sideways here for a little bit, and then hopefully sort of back end of this year when we start to see rates come down. They have promised 50 basis point rate reduction. Hopefully once that comes down and we start to see quantitative tightening ending, the markets will start to increase and recover. But again, I think Bitcoin is really going to lead the way, and we'll hope to see altcoins recover, but maybe for a lot of them not recover as much as what we would have hoped. Lesson number 3 is crypto corrections are super normal, guys. We've spoken about this so much. It can be super painful in the moment, but I've been through so many corrections, and I remember back when I put probably my biggest investment into Bitcoin, which is maybe I think it was 2018 or 2019, when Bitcoin was chopping sideways for literally 2 years. I thought we were at the bottom. It felt so painful around that $10,000 mark. So painful. When we got to that $10,000 level, I said, right, this is the bottom. I'm really going to go hard here. And literally over the next month, we dumped to like 4,000. So I was down 60% on my big investment at that point, and that was like absolutely brutal, right? No one really believed it was going to come back. That thought it was going to be the end of Bitcoin, and then over the next essentially 4 or 5 years, we went from 4,000 to like 110,000. So in the moment, it can be really, really painful. I'd really just urge you all just to step back, breathe, remember that this is not going to be forever, and this drawdown that we're in at the moment, Bitcoin's only come down about 30%. In previous cycles, even in the 2021 cycle, we were down more than 30%, I'm going to say 12 times, right? Obviously, altcoins are a lot deeper, and altcoins can feel very painful. And back to my other lesson just around those cycles is that, if you're holding assets in sectors that are down a lot, like maybe you're holding a shitty meme coin that's down 80, 90%, that asset needs to go up, 5, 6, 700% to go back to break even. Okay. And, we're not seeing that speculative drive at the moment, which can be very difficult. So one, you can, in these corrections, you've got a few options. One is you can sell down those assets into, Bitcoin. And I did this probably 3 months ago. I shared with our members, and what I did with my portfolio was just I cut those assets because I just felt that, again, macro conditions weren't going to be great. Build up my BTC stack and went a little bit more risk off. If you haven't made those decisions and now you're looking at your portfolio going, oh shit, what should I do? You can still cut the crap, and you can move them back into, something again like stables or BTC. You can add more to your positions and reduce your overall buy price. So you can lower your entry price. And that's just going to, reduce the amount the asset needs to grow to get back to break even. Or obviously you can just hodl through it. They're really your options. It really depends on the asset and the altcoin and the sector. But again, at the moment, these conditions for these high risk assets are not going to be great, and the correction is going to be far more painful when we go to the downside. Lesson number 4 is just remaining patient. And I think I see, a lot of people, and even when I talk to our clients at Collective Shift, that sometimes people are making trades based on, being bored. And I made, some brutal mistakes back, 2017, 2018 on some projects where I just didn't remain patient. I mean, Synthetics was one that I was an early investor in and sold before. I was actually invested in before it was called Synthetics, it was called Haven. And I sold that after about 8 months of it just going sideways, and I just didn't really know what was going on with the asset and kind of just gave up, sold it. They upgraded to Synthetics, and it just went on this huge 100x plus run. I literally, we lost out on millions of dollars because of it. But it was a huge reminder as to why you need to remain patient, and projects that are building good things is what I like to focus on. And if your project is building good things and the correction is just because of the macro conditions, well then hodl on. Again, price and value are two separate things. Just because an asset is down in price doesn't mean it's any less valuable. However, you don't want to sort of overtrade and remain, impatient. We had a guy the other day that sold out of one of the projects that I'm invested in, one of our members, because he sort of gave up on it, went into another asset. I think he went from Prime to Hype, I think, or something like that, got out of all of his Prime, and then in the weeks later, Prime pumped like 60%, and then Hype was down, right? So you've kind of got to be a little bit cautious when making trades in these periods of times when we're chopping sideways, because again, you're not really going to be able to outperform too much. You're really just trying to minimize your downside and remain patient, knowing that the market's going to come back, and not get too emotional. Lesson number 5 is looking at key project metrics. I see a lot of investors really oversimplify the idea of buying an asset just because some guy online talks about a project that they think that's good. They can just jump in and hope for the best. And we're seeing, again, over the last 2 years, the only real asset that's outperformed Bitcoin has been Solana. So you have to be super careful about what you're buying, because a lot of these projects are not seeing a lot of value. There's hundreds and hundreds of thousands more tokens created every month than ever before. So if you've got the same amount of liquidity, the same amount of buyers, and you've got literally hundreds of thousands or millions more tokens to buy, then, of course, these assets are not going to be able to find a lot more growth like we've seen in previous times, because you need a lot more liquidity to do that. We haven't seen that liquidity, so only certain projects can outperform. So a really basic thing, if you're time poor, is really just to look at not just the market cap, but the FDV and token unlocks. So looking at why a lot of these projects decline in value over time is because they don't have a lot of tokens coming out in the short term, which can increase the price of the asset, and then they have a lot of token unlocks over time, inflation rates, etc. So you really want to look at things like total supply. So Illuvium, for example, has nearly 9.5 million tokens. Right now, it's got 7.4 million in circulating supply, which means they've still got about 2 million to go. But we've really seen projects like these in the gaming space or layer 1 blockchains over time really increase their total supply. And you can see here, like in terms of market cap, even back in March of last year, the market cap got nearly to the peak of where we were back in 2021, right, for the price. But if you look at the price of the asset back in March 2024, the price was still down like 90%. That is because the amount of tokens that come into supply have increased so much. So you essentially, as you increase the supply, you need multiples more investment into the asset for the market cap to grow, for the price to grow. So again, market cap was only probably 25%, 30% off the peak back in March 2024 from 2021. But again, back in March 2024, if you look at the price, only 124 versus $1,800, which is just, insane. So token supply is a big one, and unlocks. Again, another way to offset that, let's say you're holding a lot of Solana. Solana has inflation rates on its tokens. You can stake your Solana or some of these assets, and you can get rewarded for, one, securing the network, but two, you can use that as an offset to the inflation rate. So it's just a good way to sort of reduce the inflation that you're copping on your investment. Number 6 is really managing your fear and greed. And this is a big one that I know a lot of people that haven't been through many cycles really feel, and that FOMO really tends to lead people to buying at the wrong time. So you end up having really high priced entry points, and then also on the fear side, when the market retraces, you start to get super fearful and super frantic when the market goes down. If you are time poor, again, a big one I would recommend is just looking long term. When you are feeling super euphoric and you're feeling like you're a legend and you are the best investor ever, and you're talking to your friends about your investments and you're taking screenshots of your portfolio, that is the biggest signal to start taking some profits off the table, all right? Manage that greed, understand it, remember where we are now in sort of this fear, not sure if it's going to come back. Recognize when you're in that greed scenario and take profits off the table. Just looking at the fear and greed index, the simplest strategy is just to follow that, in my opinion. So buy when, obviously it's so simple to say this, buy when it's very fearful, sell when it's greedy. Obviously oversimplified here. But honestly, the hardest times to take profits is when you're feeling so euphoric. It's going to feel gut-wrenching. It's going to feel like you're making the worst decision ever. It's going to feel like, you're stabbing someone. I remember when I sold most of my, profits back in 2021, when I rode the metaverse up, when I got in pretty early, when Facebook renamed to Meta, and I sold a lot of money. It felt horrific. It felt like I was making the worst decision ever, because it literally felt like we were never going to go down. And, we can reflect back in November when Trump was to be, being elected, and all these promises, like, again, we felt it wasn't going to go down. Now, a few other things happened, which the market wasn't, expecting. But those are the periods of times where it's a really good indicator to remind yourself, hey, things are getting a bit frothy here. I'm feeling really awesome. I'm feeling pretty greedy. I'm feeling euphoric. Let's take some chips off the table, all right? Same on the fear side. When the market's down, when there's a lot of people throwing in the towel, we saw this when Solana went down to $20, 3 or 4 years ago. Everyone threw in the towel, everyone said it was dead, and then Solana went on one of the biggest runs we've seen from an altcoin in the top 10 in a long time. So just remember, manage that fear and greed. Take yourself back. What advice would you give if you could duplicate yourself in those moments, what advice would you give to them, right? Or what advice would you give to a friend at that moment? It just takes the personalization out of it. Sometimes, we are our own worst enemy as investors. Lesson number 7, as I mentioned at the start, is cycles within cycles. Really, I'm just seeing the market is moving faster than ever. So as a time poor investor, someone that's busy, I really recommend not chasing these mini cycles. You probably would have noticed you were chasing some meme coins. You're chasing some AI coins. I did the same. I didn't end up getting into AI outside of my prime investment, but I got into some meme coins, did really well, probably grew 3 or 4x, but then didn't take profits. And then because I was busy and the market went down, and again, we're back to square one again. So remembering that cycles within cycles are happening extremely fast. And when you are time poor, you're ultimately most likely going to miss the top because of how fast the space is moving. So what I like to do is really go heavy on bigger fundamental assets and sectors that I know are going to be valuable in the future, i.e., some layer ones, some DeFi, a little bit of AI, but ultimately, really focusing on BTC and some of those bigger projects because I know they're going to grow in value over time, and I know that I don't need to spend all day, every day checking the charts and worrying what's going on. Because if you're doing that, that means that you're probably over allocated. You're trying to make too much, and again, when you're time poor, you're going to make poor decisions, or you're going to miss what's going on, and then ultimately your portfolio is going to be hurt off the back of it. Number 8 is super, super important. This is having a proper sell strategy. We teach this at Collective Shift. We do a lot of sell strategy workshops because honestly, it's one of the hardest things to do because, again, back to the idea of the greed, when you're euphoric and you don't have a plan, it's the hardest thing to sell. You feel as though you never need to sell. It's always going to go up. I see a lot of people not taking profits at the right time because they think that their portfolio is just going to grow forever, and it's not the case. I really, really recommend taking chips off the table as you go up. Have a goal in mind. What is your goal? What do you want to do with your portfolio? Speaking to a client of ours the other day, he's got 20 BTC, maybe 1.5 mil in alts, and he's got a big mortgage that he wants to pay off. You don't need to do it all at once. Right, on the way up, you can take chips off the table. As your altcoins are coming back and as they're growing, take 20% off the top, take 25%, put it in your offset. Do something with it where you can actually showcase you've done something with the money. Because when it's numbers on a screen, it doesn't feel real. It doesn't feel real until you put that money in your bank account. And when that money hits your bank account, it feels real. And you're like, okay, now I actually feel as though I've done something with this money. It's really, really empowering. Set those targets. You don't need to try and sell the exact top and sell everything. It's impossible to just get in and get out hundreds of thousands or millions of dollars at the exact top. It doesn't happen like that. We did some research recently on how long the market and certain assets stay in the top 5, 10, 15% of a certain cycle. It's literally days. So you're waiting years for this 5-day window. And again, in the moment, it's very, very hard to actually know. So taking chips off as you go up, making sure you lock in some profits. So again, you don't round trip another cycle because you round trip, again, potentially waiting another 3 or 4 years, which is absolutely the worst thing you want to do. You can automate this as well. You can set, put these on exchanges, have limit orders, things like that. It's another way to do it. Buy long-term assets, really a big one for me. I put this, a lot of content out recently, actually over the last 3 or 4 months to members again around really stacking your BTC and following long-term assets. Bitcoin is still up 50% over the last 12 months while everything else is nuked, right? It is compounding at 40%. If you have hundreds of thousands or millions of dollars in crypto, you don't need to continue to bet the farm on altcoins, which by looking at the market, none of them have outperformed Bitcoin outside of Solana if you've held all the way up and all the way down, okay? Yes, you could have made money if you were super in memes or AI really fast, really quickly getting in and out. But for a lot of you that I know are time for, business owners, whatever, stack BTC and build good assets around the outside. And you don't go over allocating on a certain altcoin, right? So for me, it's a big chunk of BTC, then having some layer ones, then having some DeFi, then having some high risk stuff around the outside, really getting that construction, that portfolio right. And looking for strong fundamentals because they're the projects that are going to rebound the strongest. We've seen that, Prime bounced really well the other day. Syrup's been bouncing. We're starting to see fundamental projects really come through and shine. And I think that's where investors are going to be looking at the back half of this year, once the market starts to really ramp up again, is where are those assets and sectors that are going to actually give me something that's providing value to something, not just hype, right? And speculation. And yes, I do think the memes and things will still be a sector. Don't get me wrong, but we're not going to see hundreds and thousands of these tokens just being, launched overnight and all just running up like we saw last year. This is what happened back in 2017 and 2021 where we had these different sectors, different run-up. We had the ICO boom, we had the NFT boom, we had the DeFi summer. These sectors come and go. And for me, what lasts over time is strong fundamentals and projects that are delivering value. And for me, the layer one blockchains is obviously a top space. And again, for time poor investors, you don't have time to be chasing these smaller cap coins. Lesson number 10, dollar cost average and accumulate over time. So one of the biggest things I did when I grew my portfolio was I literally took all of my salary and all the money I had for 2 years from 2018 to 2020 and I dollar cost average and I bought Bitcoin every single week, right? I used my income, I used dividends from my business, I used profits. I just accumulated as much as I could. And it's so boring. And I'm an all or nothing guy, so I totally get it that it's very hard to just be boring and accumulate. But honestly, it's the best and quickest way that you can really build your wealth up over time. And yes, you can rely on the market growth to happen, but I'm using Bitcoin as a savings account. I got Bitcoin on a balance sheet. I'm investing consistently into BTC because I know it's going to be, and it already is, a leading asset. And then I've got my alts around the outside, which I have added a little bit to, but honestly, over the last year, I've just been continuing to buy BTC, and it's why my portfolio is it's outperforming. And you can sit here and go, oh yeah, well that's boring, man. Like, anyone can just say buy Bitcoin. What's the truth, right? It's outperforming everything. And do I think it'll change at some point? Do I think alts will run and maybe Bitcoin consolidates? Yes, I do think that. But the macro and the financial sector right now is not in a position where alt's going to outperform. So why are you in a bunch of altcoins? It does not make sense. You're literally holding these things down to the ground. And yeah, again, I hold altcoins. Don't get me wrong. I'm just saying that you want to continue to build up a good chunk of BTC that's consistently compounding at 40% annually and consistently going to grow over time. And if you can get to $1 million, right, in Bitcoin at 40% a year, like you can do the math, right? Or you get to 10 million or 5 million, right? Or whatever that number is, 500K. If you can get to those numbers with your BTC stack, you're fine. You don't need to continue to bet the farm. If you have a little bit of crypto, yes, I understand why you want to bet on alts and, try and, get the home run. But as you get bigger portfolio and as you have less and less time, build a good portfolio instead. Second last lesson here, filter who you listen to. Like really, fuck, when I first got into crypto, it was just like so much noise. It still is. So many shillers, so many people just pumping altcoins. Everyone's got affiliate links. Everyone's getting paid to promote stuff. Really try and prioritize and filter where you listen to your content. Like, man, this is even in life, even on your Instagram feed and stuff. Like, filter who you listen to. And obviously, I would recommend listening to us because we're independent and we put out research and we provide research to Coinbase, CoinSpot, SwiftX, all the leaders. But there's other great people out there as well. But really filter who you listen to. And I also find that one of the biggest mistakes that people can make is they buy in an altcoin and then they go and try and find people that have the same opinion as them to make themselves feel better. And I've seen people lose a shitload of money from essentially buying into crappy altcoins that are like cults, that have cult-like communities that are just perma bullish and run these things into the ground. Like, don't listen to an echo chamber. Listen to two sides of the story. I like to listen to people who are bullish and bearish on all of my investments. Try not to be emotional. Be logical and don't live in the clouds. Like, live in reality and understand that sometimes you made a wrong call. I've made a shitload of bad investments, right? That's the reality of the situation. You're never going to be 100% right. Portfolio allocation is key. Build your BTC stack. Don't over allocate into altcoins. If you've gone too hard into altcoins recently, you've been burnt. Balance the risk with long-term goals. When we see the market pump, take some profits, put them into stables, put them into BTC, but don't let altcoins really get into 30, 40, 50% ranges, because if you go on the downside, when you've got an altcoin at 40 or 50% of your portfolio is going to be absolutely smacked. All right. So be careful with that. And again, we looked at a portfolio allocation comparison recently. You would have just outperformed everyone if you just held BTC over the last 2 years. People overcomplicate this whole space. If you just hold a bunch of BTC, split into some good alts, diversify in good projects you think are going to have value in the future that are not just a short-term hype cycle, you will outperform every day of the week. Hopefully that's been helpful. If you like this video and you want more lessons, insights, strategies, let me know in the comments below what you think. Please share this with a friend if you find this was valuable and you think your friend needs to hear some of these lessons. Leave me a subscribe if you like the video, and I'll see you on the next video. Cheers, guys.